What I will say at this stage, and I'll come back to this, it's just occurred to me, is that I don't know whether this is going to apply to directors only. So I do need to look into that. So before you start putting up questions about directors, as I'm sure you will, we may have to revisit that again next week when we've got some more details. Now, the interesting thing is that employees can be part of this scheme even if they were never furloughed. So if you had a business that was going through the summer and some of your staff weren't furloughed, they can now go on to this part-time working arrangement. Or if you never had anybody that was furloughed and you're struggling now, then now is the time to start looking at the support that's there. If you are keeping your staff on till the 31st of January, in addition to this, the job bonus is still available. I think it's £1,000 for employee, claimable at the end of January if you still have somebody in post at that stage. So this is in addition to the job bonus scheme. Now, how it works. Employees must work at least 1/3 of their normal working hours at the normal working rate. We are not talking about furlough rates here. We're talking about current wage being paid. So whatever you're paying them as normal, that's the figure that we're using. We don't have to go back and calculate average working over the last year. It's what you're actually paying them on an hourly or a monthly rate at the moment. Okay. So the employer pays for the working hours as normal. So exactly the same as we're doing under flexible furlough. Whatever hours they're working, you pay them at the rate. So minimum wage applies for this year and everything else as well. Now, where the government contribution comes in is for the non-worked hours. Because what's going to happen for the non-worked hours, and I'm going to show you an example, I'm going to work through an example in a moment. The employer is going to pay 1/3 of that for the hours that are not worked, and the government pays the third. And the employee doesn't receive the final third. So basically the employee is expected to contribute, and I use that in my rabbit quotes, the same amount to their non-working hours as the employer and the government is going to do. And you'll see that when I show you an example. Okay. As I said before, the contribution is based on the normal wage, not the wage used for furlough calculations. And the contribution per month will be capped at £697.92. Now, I have already had an email came in literally to me about 10 minutes ago from Audrey Parnham. Thank you for that, Audrey. I don't know whether you're listening this afternoon, about what's happened on a weekly basis. What is the cap week? What happens if you pay 2 weekly? I'll come back to that. I'll pick that up again in a moment, but I do have that one question. And the contribution will not cover the employer's NICs or the pension contributions. So that's important. It is purely to cover the actual hourly cost of the wage. Now, there is a sort of a comment in the document, which I haven't quite got my head around yet, that says, is talking about topping up and paying more. And I don't know whether that is, there's a lot going on about already about possible fraud in this situation, of whether you're paying them 1/3, you're expecting them to work more than 1/3, and you're claiming that back from the government. That is not the idea. We've already talked, it's exactly the same as those under the CJRS scheme, where some rather dodgy employers were claiming the CJRS, but expecting people to work. And there are ways that you're going to have to prove that this is working, and we'll cover that in a moment. So covering 1/3 of the non-worked hours, employee covers 1/3, and the employer covers 1/3. So how it's going to work, these are the dates that you must be aware of. The employees must have been on the PAYE payroll on or before the 23rd of September 2020, which was yesterday, which is when the announcement was made. So we're right back where we were in March, looking at the dates of employment. So if you have someone who's taken somebody on the 1st of September and you haven't yet done an RTI submission for them, they will not be covered by the scheme. Okay, the Chancellor did say yesterday he couldn't save every job and he couldn't pay everybody that's employed. And this is the first crunch point, that this 23rd of September yesterday, if you didn't put that RTI in, so if you, for example, have taken on a monthly member of staff and you're not due to pay them or report until the end of the month, they're not going to be covered by the scheme. and HMRC must have received that notifying that payment's been made on or before. Now, this is the interesting one. This is where it differs again slightly to CJRS. Employees cannot be made redundant or put on notice of redundancy during the period in which their employer is claiming the grant for that employee. Now, under the CJRS, there were redundancies, and we did find out that if you were making somebody redundant during the CJRS period, then you could claim and still pay them furloughed money during the period of the redundancy. You couldn't pay them any additional redundancy pay. This does not apply under this new job scheme. Okay, so let's have a look at an example then and look at some figures. I've tried to make it as simple as possible. So an employee normally works 36 hours at £10 an hour, basic wage, £360 per week. Fairly obvious, simple calculation. That's what they would pay. Now, at this stage, I don't know what's going to happen about normal overtime, and I don't know what's going to happen about holidays. So we'll pick that up when the detail comes out over the next couple of weeks, because there will be some more details coming out. Now, under the new scheme, the employee works for 1/3 of their week. So they are going to work for 12 hours a week and be paid 12 times 10, which is £120 for the hours that they have worked. So that's the basic third that they're working. Therefore, they have 24 hours in which they're not going to work. So the employer will pay 1/3 of this. So they will pay their employee a further 8 hours at £10, £80. That's the employer's third. And the government will also give a contribution of the 8 hours at £10 an hour. So what the total wage received by the employee will be, their worked hours plus the 280s comes out to be £280. So the employee is therefore, quotes, contributing the balance, which amounts to £80. So they're actually going to be £80 down on their full weekly salary. And that £80 is the same as the employer and the government are paying. So that is what the government, what the Chancellor means by the employee contributing towards this. So they're actually going to lose their 12 hours of their pay. Okay, I think that's fairly straightforward. If you want to go back and look at this again, you can unpack this, and we will probably get this presentation up on the website at some stage for you to download if you want to. Now, the government is therefore paying £80 out of a total of £360 per week. So we're going right the way back up to, don't know if you can see the mouse, up to the £360, which happens to be 22.2% of the gross wage. So that ensures that the employees are going to earn a minimum of 77% rounded of their normal wages, where the government contribution has not been capped. Now, you've obviously got to work out the cap on that. Now, what I don't yet know is if we are talking at a much higher hourly rate and we're up to the cap, whether the employer has to pay just the capped amount or whether they have to pay the full amount. My reaction in what I've read is that the employer only pays up to the cap, but I have to do some more research on this. This is some of the detail that's going to come up later, and I'm sure lots of people are going to be asking these questions. So that's how the job scheme is going to work. A couple of notes here. Employers are going to have to pay that government portion up front and reclaim it via the portal. So that's going to work exactly the same way as CJRS. You pay them and you reclaim the money in the grant. The portal is going to open in December, don't have a date yet, but this time you can't claim in advance. So you have to have submitted your RTI before you can claim the rebates, the contribution from the government. Again, slightly different. Claims can be made on a monthly basis. So the idea is that we'll get to the end, we'll get to December, and hopefully then you'll be able to claim your November pay and then December pay after your December RTI submission, and then carry on through to April. Now, HMRC are going to check claims. They have, I will pick up later, restate the amount of fraudulent claims that the government think there have been. So they are going to be making some more checks on this one. I think they learnt some lessons in the first set, so they're going to be looking into this, and payment may be withheld or need to be paid back if it's found to be fraudulent or based on incorrect information. And you can only use the grant or contribution as a reimbursement for wages costs actually incurred. And that's one of the reasons why we're doing RTI submissions first. Now, it has to be done in writing. This is in the government guidelines that came out yesterday, and I have got a link to the government guidelines that I found this morning on this. Employers must agree the new short-term working arrangements with their staff, make any changes to the employment contract by agreement, and notify the employee in writing. This agreement must be made available to HMRC on request. Now, that's a new regulation that wasn't in under CJRS. So again, much tighter this time. And there is a link there, which we will hopefully, I don't know whether we can get that up in the chat for everyone to get the link to. That is a document that it takes you into gov.uk. You click on the link and it downloads a PDF, which has got all of this in detailed. A lot of what I got came from that document. So please use the link and take it from there. So that's basically what's happening with the job scheme, but he has also announced a self-employment grant. So there's another possible two self-employment grants coming. Government's continuing to support the self-employed. There is a further one-off grant, which is going to cover the period from 1st of November to the end of January. So it's a 3-month period. The actual amount is a lot lower than the two previous grants. Remember, the first one was 80%, the second one was 70%, but it does almost match the grants to employees, because what government is going to do is pay 20% of your average profits. Now, we've discussed what the average profits are based over 3 years of self-assessments or relevant periods if you weren't trading for 3 years, still based on the self-assessment. The cap this time is £1,875 for the full 3 months, which is a maximum of £625 per month, up against the employee contribution, which is £697.92. So it's slightly less than you're going to get, but at least he's put something in there. I've tried to find out some information as to why it's less than the 22.2%, but there's nothing there at the moment. I thought it might be to do with employers' NI contributions, because they're not covering that. So you are paying for the employer's contribution, you're paying your employer's NI on that. So the extra 2.2% that you're getting as a grant from the government for this might possibly go to support the employer's NICs and pension contributions on that part of the wage stroke salary that the employee is making. So that's what the situation is with self-employment. And at the moment, there is going to be a second grant, which will cover February to April 21, but may be adjusted depending on changing circumstances. So we don't know what's going to happen. We won't hear information about that for some time. So that's basically what's happening on self-employment. Bit of news on VAT and deferred payments. If you remember, there were 2 deferrals. One was for VAT deferment for 3 months, and one was for the second payment on account for the self-employed. First thing is that the reduction for the hospitality industry to 5% is being extended now from 31st of January to the 31st of March. And also, if you're into the flat rate scheme, I haven't got them on here because they're readily available. They're exactly the same. The flat rate scheme percentage reduction is extended again until the 31st of March. Deferred VAT payments for the VAT quarters was due to be paid by the 31st of March 21. Now, deadline has now been extended. You no longer have to pay this in one lump sum. You can pay them in 11 interest-free instalments, which have to be paid by March 2022. So you've got a year, but you haven't got a year to pay the whole thing. You've got to start paying it in 11 installments. The application deadline for loan schemes, that's CBILS and the bounce back loans, BBLS, has been extended to the 30th of November. I can't remember whether it closed in September or October, but it's now been extended to 30th of November with approvals closing on the 31st of December. So if you do need to take out one of these loans, or if you wish to take your BBLS loan and convert it to a CBILS loan, you can still do that if you want to, up to the end of November. The loan schemes are now going to be called pay as you grow schemes, particularly the BBLS scheme, because what's happened is that the length of repayment has been extended from 6 years to 10 years. Now, with the loan, you didn't have to pay anything in the first year, and then you had 5 years in which to pay it back at whatever reasonable stroke other level of interest, rate of interest that had been extended. So the fact that the payment has been extended is going to reduce your monthly payments. But what I haven't had time to do is to look at what effect that's going to make on interest, because obviously if you extend the length of payment, you pay less each month, but I think you're going to end up paying a lot more interest at the end of the time. So this is the minimum, this is the maximum you can extend it. If you want to pay it off earlier, all the better, better for you, better for everyone else. But for the BBLS loans, they are giving you 6 months to pay an interest-only payment. So you only have to pay the interest for 6 months. You also have an option to apply for a payment holiday, extending the repayments altogether for up to 6 months. So it may very well be that you can take a payment holiday for up to 6 months. The interest will probably still accrue. Well, I'm sure it will still accrue, but there is a lot more flexibility in what you have to pay. The government backing for these loans, I think, remains unchanged. And that is all, yes, that is all I think we had on the loans. Self-assessment payments on account. Now, the July self-assessment payment that was due this year, which was the second payment on account for the 1920 tax year, was due to be paid in January 21, along with a balancing payment. And the government's now concerned that that's going to mean a fairly hefty one-off lump sum that's due in January. So it's the second payment on account plus all of the balancing payments. Interestingly enough, the government was quite surprised that 30% of taxpayers actually paid their payment on account in July. And they were very pleasantly surprised at that. That came from one of the HMRC meetings I was at the other week. But what's happening now is that your all self-assessment payments that are due in January can now be spread over a period of 12 months, starting from January, but they must be arranged through the time to pay system. So if you're struggling to pay, you need to apply it through that, and they will be spread. And I haven't got it on there, but I'm pretty certain they'll be interest free. So if you're in that or have clients that are in that situation, then have a look at what's available for you on the self-assessment. We covered this last week, but I thought I'd just pop it in on a slide so you've got it on a slide to look at. Last week, HMRC announced that £200 million of the 35.4 billion paid out to 1.2 million businesses under CJRS has already been repaid voluntarily for overclaims made in error. So that's what they've already got back. We've spoken about overpayments and how you do that. 200 million has been paid back. And the government has about 27,000 claims under CJRS that it believes looks wrong, of which 11,000 are being investigated first. We don't know the reasons for the concerns as to why they're being investigated. And it is quite possible that some of these may be generic overclaims that are correct, because they might cover people like parental leave returners and military personnel returning to work. So anybody who's been working for the military for a short period of time and who didn't fall within the original March deadline for the coronavirus scheme were allowed to be furloughed and claim that even if they weren't on the payroll at that stage. And it may very well be that some of those claims include those individuals. And that's it. That's all the information that's come out. So let me stop sharing my screen. And
well, that's quite a lot to take in, Jackie. Thank you for that.
That's a lot to take in. That's why I've put it up there for Factual Friday. That's why I've put it up there so that you can watch it again at your leisure if you can bear to, and take some notes. But we will get that presentation up on the website, I think, at some stage, Gary. It might be useful for them to be able to download and have a look at. So, pause for a cast.
So we've got a couple of chats coming through from Facebook. Karen Stevens saying the employer is effectively paying £16.67 per hour. Surely any employer will see this as way too much to bear. They would be better laying people off and putting everyone on part-time workers and just pay them for what they work. Okay, it's not quite as simple as that, I don't think. But
well, that's you're talking about legal things there, because the trouble is, it's why do you have to look at the legal employment law. It's very difficult and almost impossible to lay someone off and then take them back on as a part-timer without renegotiating their contracts, because then you are into why did you lay them off? If you are making them redundant, you cannot therefore employ them again because the job is redundant. If you are laying them off and then re-employing them, you've got to look at the legal implications of that. And it could very well be that you'll be opening yourselves up to, I don't know, some sort of unfair dismissal claim, I think, just to save money. I don't know enough about HR law to be able to get into that, but I think they're
yeah, I've had a couple of people this week talking about clients that want to make everybody self-employed instead of employed. And then they give them a 0 hours contract. Well, we all know that doesn't work under IR35. It's not quite as simple as that. So, you know, be very, very careful on anything that you're being asked to do for your clients. We do have a technical advice line, although I have to say it's red hot at the moment with everybody wanting the information. But I think we're getting everybody through. So just be very careful. Sarah Hawkins does say, thank you, Sarah. Great summary. Thank you. So well done, Jackie.
And Jeff has come up and said, please send the link so we can watch it again. It will be up on Facebook. I don't know whether you can get the link through Zoom, but certainly it goes up on Facebook, because I have to say I sometimes watch what I've done again to make sure I didn't say anything I shouldn't say. So it is available on Facebook. Normally on Saturday I see it, so I'm sure you'll get it again.
I never look again because I normally say something wrong and I don't want to be reminded. But anyway, all the see details of what is claimed will be shared with the employee.
Not sure about that, Audrey, but Audrey, I'm glad you're on, because obviously it's your email that I was referring to. If we can't answer it today, we can do that on a one-to-one next week. Did you see details of what is claimed will be shared with the employee? Well, all the claims should be shared with the employee anyway. The employee should be very well aware of what's being claimed, because there was something I read that I couldn't get back to find that said there is a maximum that you should be paying them, and that I think it was to do with topping up, but I will need to go away and look at some of the details again, and hopefully we'll have some more answers for you next Friday. I'm sorry, I'm not going to be able to answer all your questions today.
I think one of the many claims that are being looked at the moment, one of our members I know has already complained in the appropriate manner about this, about a company that has been getting the furlough payments, and they are making out wage slips. They're then reprinting wage slips with a lower amount on them and paying people so that they're keeping more of the money for themselves without it being declared. So there are some really nasty fiddles going on at the moment, or have been going on. So obviously government is going to look out for the...
And I think that the government, and I think the same thing's going to happen with this, because if they're trying to fraud the system one way, they're going to try it another way, which is why this time it's interesting that HMRC have said they will want to see the agreements, or they could see the agreements. So if you have an agreement with a member of staff which actually details exactly what they're going to be working, what they're going to be paid, and you send that to HMRC if they ask for it, I think that might go some way, because if HMRC come back and think your claim is not correct and ask you for proof of what your agreement is, then if they haven't got that agreement, or it's different to what they've claimed, immediately the payment will be stopped.
Fiona McKinnon, can I ask, does the minimum 520 per month in November, December and January for the bonus payout of 1,000 in February include the additional JSS top-up by the employer and government, or is it based on the hours actually worked? You need to read that one again.
Interesting one. I'll have to go back and have a look at that, Fiona. Again, I think we'll have to take a note of these. It's still so new, and we've not. The devil is in the detail, as they say, and I may have to go back and look at that. So what we'll do is we'll take a list of all these questions, and anything I can't answer today, I will come back with next week, or possibly even before next Friday, but definitely by next Friday.
Yeah. I think if something really interesting crops up, Jackie, we can telephone it. We can notify everybody, and we'll do a short review program.
Yeah, we can get something out. Terry's come up with a question on the BBill scheme. Is there any detail about who is able to defer repayments or interest only? All I've seen is a business in trouble. Well, what does that mean? I think my answer to that, Terry, is how long is a piece of string? Because I really have no idea at this moment. Ducking the question almost, it's like, how do you gauge that your income has reduced under the self-employed grant to be able to apply for that? The answer is I don't know. It's still very early days. We've got a bit of while because this doesn't start until the 1st of November. So fortunately, he's given us, 4 or 5 weeks to work it out, and take that from there. On the chat line, Jamie's come up with a slightly different question on the employer's allowance. Jamie, I'm going to leave that and come back to that later because I do have an answer for that, but let's just see. Now, Emma Dow's got an interesting question. Can the employer top up to 100%, or does the employee have to contribute the 22%? That's what I need to look at, Emma, because I've seen something somewhere that says the top up may not be possible, but I'm sure that's not right. I think if the employer wants to top up, they should be able to, but only, I don't know how you're going to show that on the RTI information. So again, let's come back on that one, please, if I can bot that one an answer. Linda, how is this new job help scheme going to work practically for a payroll to be run by the end of the month and for the employee to be paid in time, especially for directors to get their hours in for a full month, for those working part-time still due to COVID, and for them to be paid by the end of the month? Before, we could always run based on estimated hours as their gross pay was static. With the reduction in pay due to effective contribution, then the pay cannot be paid by the end of the month. Again, I think I'm going to have to think about that one, but I would say you could probably still estimate for payday. You may have to do an estimated pay and then perhaps correct it the following month. As I said, I think there's going to be an awful lot of questions I'm going to have to take away and come back with next week. But thank you for firing these up, because we'll have to take them away. I'm sorry, I'm not going to be able to answer them all this afternoon.
Have you got the one from Susanna Whelan? I've asked this before, read the CGRS, but I think this is going to be even more of an awkward one now. If a director's wife is on the payroll but does very little or no work, they therefore have no usual working hours, and I would say they cannot take advantage of the job support scheme. Do you agree?
I do agree. I don't think they should take advantage of it, because if they're not working, it's a way of sort of transferring money out of the business into the family and not pay tax and whatever else. So the rule is you have to have a written agreement with your employee, and I think that's going to happen. I don't know what's going to happen about sole directors. As I say, the more questions that are coming in, it's obvious I'm not going to be able to answer these this afternoon. And Maggie, will we be receiving clarification re employees whose salaries vary, commissions, etc.? I hope so. Again, it's something, all we've got is the basics. The detail has yet to come out. I've already had a long list of stuff come out from my HMRC contacts. They're brilliant every Friday morning now. They're sending us out updates like mad to all the professional bodies. And I've been through that this morning. And what I will have to do is take some of these queries, I will send them off to the professional bodies group and see what comes back from HMRC. And Catherine has said, do the hours have to be the same every week or month rather than a flexible nature as in current CJRS? Again, sorry, don't know that one. I think it's going to be more, no, I can't answer that, then yes, I can this week, and I can only apologise, peoples.
Yeah, I think the thing is pretty fresh, but as I say, we can either, everything is going to be put on the website anyway, so there will be I'll make sure that we get an email out to everybody if there is something that hits the email, hits the website, but also if there is something really important Jackie thinks she needs to say it, then we'll send you a note around as well. So we might not give you much notice, but we could be saying, right, Jackie's on in the next hour, have your cup of tea quick and come and see what's going on, because I think we've got to suck this. You can watch it on a
catch up. You can watch, yeah, we like the BBC iPlayer. We do catch up. Now, if there's nobody else on what I've said, what have we got on this one? Oh, thank you, Terry. I won't read that out. Nicola said, can the employee work more than a third of their hours? I think it's a minimum of a third. So I think whatever they work, the remainder of the non-working hours, they have to work at least a third. I think if they're working a half, then it's the other half that will be split third and third and third. So I think that's probably okay. And how, oh, Judith, knew someone was going to ask it. How will 0-hour employees work? I don't know. I am wondering if we could look at possibly an average of the hours they worked over the last year, and they work a third of those, and we count that as a third of their working week. It's a thought. Again, I'm going to have to go away and have a look at that. Jeff has come back and said, if HMRC want to look at the JRS calculations, do they give notice or just turn up? As a bookkeeper, I'd be happy to talk to them, but would like notice first. No, I don't think they're going to turn up. They'll write to you. You'll get an official correspondence in some way, Jeff. I think they're just not going to turn up on the door.
Jackie, something up here. I'm not sure if this is what you said. Somebody asked about usual wages calculations. Yeah. Did you say, according to this, we'll follow a similar methodology as that for coronavirus job retention scheme. Full details will be set out in guidance shortly, it says. Yeah. Employees who have previously been furloughed will have their underlying usual pay and or hours used to calculate usual wages, not the amount they were paid whilst on furlough. Yeah, I knew it was the usual wage, not the actual, because the furlough amount was 80%, but I think it's the working out of what their normal hours is going to be. And it sounds as though what they'll have to do is go back and look at the average, exactly the same as you would for holiday pay. You'd go back and look at the average of the last 52 weeks, work out what their normal working hours would be at their current rate, and then they get paid and the government. But you've got to have the calculations. Now, we did all these calculations for CJRS, so you should have your calculations there for the average number of hours. You're looking at the new hourly rate. So now, if the hourly rate's gone up, if they're minimum wage or they've had a pay rise, which is highly unlikely, but if they have, you're going to use your current wage, not the old wage. And the government's also said about this minimum 33% they're going to go back on, and after 3 months to see if they need to drop it below 33% of a person's normal hours. Yeah. So they're looking at that.
That must be fairly new, because I hadn't seen that when I looked at it and the stuff that came out.
This is hot off the press, or at least the print.
Well done. Okay, and oh gosh, you really are busy this afternoon. I thought this was going to be a hectic session. From Karen Stevens, thank you. This has been really informative. My first one, as I'm usually at a client on Friday. Well, I hope the reason you're not at a client today is for a good reason, not because you no longer have them as a client. So let's hope that that's for a good reason. You decide to have a nice day off and watch us. Fiona McKinnon, following on from the 0 hours, would you be able to find out about seasonal workers? Would it perhaps be the same as furlough, whereby it's based on the same month as the previous year? My gut reaction to that is probably it's going to have to be, because you're going to have to work out the normal hours, which is going to be the same as the furlough calculation. So I think the answer to that is probably yes. I'm just going to pop back and take Jamie White's query. Slightly off topic question, but for April to July, could the business have claimed for the ER's NIC and used the employment allowance? Well, now, yes, we have covered this. And what happens is you can't claim both. And it has been confirmed now that, for example, if you claim the employer's allowance in April, you weren't paying NICs because you were getting a grant towards that, and therefore you weren't claiming the employer's NICs under coronavirus. However, if you claim it later in the year and you decide to start claiming from November, what HMRC does is it backdates it to April anyway, regardless of when you claim it. They backdate it to April, and that's when the CJRS claim is in. So you can't claim both. So if, let's just say, for example, you can claim up to £4,000 on allowance. If in the CJRS period, you claimed, say, £3,000 of employers' NICs under CJRS, you can then claim the last £1,000 under the employment allowance from now on. If, however, you claimed more than £4,000 CJRS grant, you can't claim any more under the employer's allowance later in the year. So your maximum that you can claim is £4,000 for the employer's allowance, if that makes sense. Okay. Right. Okay.
Audrey has been on again. I'm not sure. I was reading and I've missed what you said, but did you cover a bit about Audrey? She said they've released a table of the different percentage hours worked and the relative percentage of employers and government contributions.
Did see the table, and it's in that. It's in the document that I've given you the link for.
Right. That's it. Thank you for that.
I think it's the bottom of that. There is a table. So if you follow the link that I showed you or I gave you, or maybe we can get it up. I don't know. Yeah, that one. That's the one.
It's not a particularly large table, but
it's not large, but it might give you some more information. So as I say, sorry, I've been trying to get my head around this for the last day, and I'm obviously not going to get it all covered. So we do try. You're busy this afternoon.
Elderly daycare centre, what happens if it is not possible to work, says Sean.
Sorry, I was just looking at Audrey's comment again on that table. A third is the minimum hours that have to be worked. Anything up to 99% is possible. So yes, whatever you're going to work, the balance that you're not working is the bit that they're going to split 3, 3 and 3, regardless of percentage. Okay.
So I think Sean is asking if you can't work, do you just not get paid now?
If you can't work for whatever reason,
it's a daycare centre, and there isn't anything happening, I suppose. That's interesting, because there are a lot of other people who can't go back to work that have been furloughed. And I know it sounds very tough, but the Chancellor did start his statement in Parliament yesterday by announcing that he was not going to be able to save every job, and if a job isn't viable, it's not going to be held open because it's not viable. So I hate to say, if they're not working, you've got to be working for a minimum of the time. So if you're not working because your organisation has closed for whatever reason, so no, I don't. I think these are the people that are going to fall outside this scheme. I don't think there's any not working. Try and get a bit more information on that, because obviously there are sections that can't, particularly if there's COVID in the building or something or other, and they're suddenly. Yeah,
I don't know. Again, I think it's going to come out in the detail. I was reading, interestingly enough, I found it was one of the very well-known online accounting newspapers that I read every day, has an article on it by Ian Holloway, who has spoken on this meeting, and most of you, if you were at the summit, you might have met him or heard him at the summit. He's put a very interesting article up in the last day or so on statutory sick pay from COVID and the rules and regulations, and it explains it really well. I had a quick look at it before we came online. So again, we don't yet know what's going to happen about people who are, again, can't go to work because they're isolating. They may have to go on statutory sick pay. and there are some rules and regulations of that. So it might be worthwhile finding Ian's article on that.
Yeah, because I think this word viable, I mean, where I think that's to try and stop people, keeping people on COVID, knowing full well at the end of all this, the business is dead. But I think where there are things like, well, I don't know, schools, for example, where everybody goes back to school, then they have, then they have to leave because somebody's got COVID. The job is still viable. It's just that they can't do it at that time. So it's an important one. I think we need to get some answers on. I
think, fortunately, with things like schools, it's probably not so bad, because I think their contract would be that they continue to be paid anyway. So it's the jobs like the daycare centres and things where perhaps they're not government funded, because this does not apply, I think, to government funding, because those on the who were involved in nurseries, on the early years focus group, we've had long conversations about employees who are part or fully government funded, and obviously this doesn't work, and depending on the funding, early years and schools may be outside the scope of this. Again, early years people, if you're on there, something we need to look into. Now, the local lockdown, can I come back on the local lockdown? There is a new grant available that I mentioned last week for local lockdowns. It's not very much, but it does help. Now, if you're in a local lockdown area, there is, I'm just trying to see my notes from last week, a grant available of £1,500 or £1,000 for smallest businesses to cover 3 weeks. So it's only £500 a week. Yeah. Or £300. Which might help towards costs if you're in local lockdown. I know it's not much, but things like the business rates holiday is still going on. So it might be possible that you could use that to contribute and pay towards staff salaries if people are off.
Yeah, it's been announced now there's a few more lockdowns, particularly Wales, I think. Cardiff, Swansea, Llanelli, literal in it. That means at the moment, when you add that to, they've got Caerphilly, Merthyr Tydfil, Newport, Bridgend, Blaenau Gwent, Rother Cynon Taf, I think it's called. 1.5 million, or half the population currently in lockdown. And my sister took her son Alex to Cardiff University, expecting to see him again shortly when he has his first break. Apparently she's not going to see him for a while. So hello, Alex, if you're around. Yeah, it's getting tough out there, and there are a couple of other places. Leeds is mentioned at the moment. Various things. Yeah,
I know the Scottish university students aren't going to be able to go home for Christmas, are they? Because it's the mixing of 2 households.
Something like that, yeah. I mean, it is really difficult.
Interestingly enough, on a slightly different note, I don't know if anyone else has downloaded the new Trace and Track app onto their phone, but we fortunately here have a very low instance of COVID, and yet our area shows as medium, and they picked it up on our local South East News last night, that if you look at our area, which has one of the lowest, it's partly because we're all older and it's a retirement area and nobody goes anywhere anyway. That's why our instances are quite low, but we are medium simply because the areas around us, like Ashford, Medway Towns, Gravesham, which are rising fast, means that we're automatically in the medium risk areas. So, yeah.
It's one of those joys of working with algorithms, I'm afraid. How we all get to know the wrong thing, So, yeah. But anyway, hopefully it plays the other way, that because you've got so many elderly people, that the cost of car insurance or something comes down for them, but you never know. Yeah, members are finding it tough out there. They've had a really tough time of it so far, having to look after families more, having to look after their kids, being at home all the time, being teacher, mum, nurse, dad, everything you could possibly think of. And you've done really well, and and I still speak to people who are saying, I can't believe how busy I am, but we're keeping our head above water, we're going for it, etc., etc. And we need this Dunkirk spirit, I think it's often called, because things are continuing to look grim on occasions. We've got to move our way through that. And I wrote an article, many of you have read it a little while ago, called When the Tough Get Going. Sorry, when the going gets tough, the tough get a bookkeeper. And that has helped out a lot of businesses. We are getting so many good reports about our members at the moment saying, great, your bookkeeper helped me. They're naming you. They're saying what a wonderful person you are. Can they nominate you for something and all this sort of stuff, which is great. But, you know, obviously it's going to get tougher. This latest job scheme sounds even more complicated than the first one, which is why Jackie is reserving the right to come back over the next couple of days and tell you anything more that she can find out about it. And that is what, as bookkeepers, you're there for. We know it's in among lots of other things that you're having to do in one go, but thankfully you've always been very good at spinning lots of plates at one time. So long may that continue. And we know from everything that's coming through to us, either in this mountain of emails that we've got, or telephone calls, or support lines, etc., support calls, that yeah, you're just getting on with it and you know, making the best of a bad job. So it's interesting to see that everybody now is talking about March. Whether or not that's the end of it, nobody's saying yet. But you know, grants going until March. Don't expect to see too many people over Christmas. You know, Christmas is only, what is it, 90 days away or less, isn't it? It's 90 days to the end of the year, isn't it? Something like that. So it's about 80 days away. Yeah, we're all going to have a slightly different end to this year, I think. And hopefully beginning of next year, we'll start to see a light at the end of this tunnel. But I've just seen that Russia's closing various places, France, Germany, they're all doing very similar things to this. You know, this is just dragging on, I'm afraid. So we'll have
just to, before I pick up on the technical queries, a couple of comments coming in about low risk on the phone app. Kirsty in Cambridgeshire, Carol in West Devon, and Susanna have all said that nearly everyone has got their area coming up as medium risk. So yeah, no one is saying low risk because it would make you too complacent. I think that's probably it. And Jeff has asked, do you need a Kent access pass to visit me? No, you don't. We'll allow anybody into Kent. Seriously. Where are we? Oh, Jamie's come back on his employer's allowance again. Said, sorry to clarify, if we claimed employers' NICs through the furlough, then the employment allowance should not have been put through the payroll at the same time. Difficult to say that one. You're going to have to check your figures, I think, on what was claimed, because it depends what happens toward you. You haven't got long. I think, Jamie, you're going to have to go back and look at what you've claimed and look at your employer's allowance and see if it's gone over the £4,000. Because if you claimed more than £4,000, I can't remember actually. We did look at this earlier. Jamie, I will come back to you on that one and send you some information. Jamie White, leave that with me, Jamie. I'll come back to you.
On a slightly lighter note, my big concern about what to call Friday, what the F should be used for. Judith Siddle's come back and said, what about Factual Friday? Now, I'm not sure if that's a spelling mistake, whether it should be Factual Friday, because fractual apparently is some sort of little emoji thing, which is part of a bigger overall picture. So you could be right there.
Factual Friday.
Judith, you could be coming up with something very clever there, or you could have made a spelling error, but we'll give you the benefit of the doubt, I think, on that one.
Well, I have to say, I've certainly got a load of factual stuff coming out over the next few Fridays. I've got so much stuff piling in at the moment. HMRC have woken up and are moving out of COVID and into everything else, and there is just so much going on. I have had a webinar nearly every day this week with one organisation or another. So we have got, so maybe Factual Friday is a good one, because I have loads of stuff coming out over the next couple of weeks. And that's without getting into the summit word, which I won't open up yet. I'm sure Gary will later. Jamie, thank you. I've got your email address, so I will pick you up on that. I will look into the top up from Lydia, topping up the 1/3 reduction for the employee. I'm going to say something quite controversial here. Yeah, I have had conversations with the members over the last 6 months or so about employers topping up, and it's great that employers want to do that, but if someone is working 1/3 of the week, it's very nice to be topped up, But if there isn't the work, they are still getting 77% of their salary for working 33% of their time. Now that's possibly negative, it's probably a bit controversial, but we are in dire straits here for some businesses. So I think everybody has to sort of maybe share the pain. I don't know, but come back at me. Right. Have we got any?
That's not like you to be controversial, Jackie, but
no, never controversial. No, not here anyway. I might be at HMRC, but I'm not here.
You mentioned minute ago, there is a lot of planning at the moment going on because of Summit, ready for Summit. It will be virtual, as you all know. Global Bookkeeping Week starts on Monday, the 16th of November through to Friday, the 20th. Summit was originally going to be Monday, Tuesday, but we are doing it instead on Tuesday, the 17th and Wednesday, the 18th. Now, that's because we didn't want to launch straight into a Monday and find that there were any sort of technical problems. So Monday is going to be our testing day to make sure everything is up and running, because we have purchased a new platform so that we can give you lots of different things. You have more accessibility. You can talk to each other whilst you're on. You can chat to other people, listening into what you're listening to. You can see what people are doing, etc. And it's a good piece of kit. It's cost us a fair amount of money, obviously, but the main thing is that we're testing it at the moment, and the team that are behind this, Amy Soey and her team, they just want to make sure that on Monday they can get it right, because the last time we tried to do this, if you remember, thousands of you jumped on all on about 1 minute to 9 or something or other, and we broke the system. So we're trying to make sure that doesn't happen again. So Global Bookkeeping Week, as I say, for the whole week. So on the Wednesday, it will be the second day of conference, but it will also be the normal Raise the Cup day. And that will start in New Zealand and finish somewhere out on the west coast of America. And we've got lots of people lined up for that. We'll be having some global people saying hello during the day. And so that will be just so that you can see what everybody else is doing, because all of the problems and the things that are hitting us here, everybody else is suffering exactly the same. Everybody else is coping. And the article that I wrote that I mentioned earlier went out onto LinkedIn, and over a third of the people who liked it and read it came from outside the UK. So it's a global phenomenon. So we're being there for everybody. And that Raise the Cup there, as I've said before, it's instead of coming out on a Thursday night and clapping for bookkeepers, we're raising a cup on Wednesday, the 18th of November. So get your clients involved, get your relatives involved. We want everybody that we can possibly find to be seen, to be raising a cup, to say thank you, bookkeepers, for everything. We've got a couple of politicians that are coming on. They're going to say thank you for looking after everything that you've been doing over the last, well, what is it, 4 months now, isn't it? March, April, May, June, July, August, September, 6 months. Wow, yeah, it's a long time. Doesn't time go past fast when you're having fun, as they say. So all of the announcements about Summit and about the Lucas, because we'll be still running the Lucas, will be coming out on the 1st of October. Also on the 1st, the nominations will open for the Lucas. We will be doing that. It's a little bit difficult, obviously. We're trying to look at what other people have done, like the BAFTAs and various other people. I can't say it was the best program I ever watched, and I switched off halfway through because I was losing the plot. I'm hoping that none of you will do that. So we're coming up with something that's a little bit better, we hope, but we'll be giving you some great ideas on what's happening with that very shortly. Tickets will be available from the 1st of October, and there will be a rate for people who are not members who want to come along, because at the moment, this television program is drawing in, quite a big audience from people not only around the world, but a lot of people in this country who aren't getting anything similar from their own members. And I can guarantee that with Jackie having put a foot forward and saying she's going to do something about the new scheme today, we'll have a lot of people who are non-ICB. So hello to all of you who are non-ICB. Make sure you get more involved with ICB. If you're good enough to be a bookkeeper that to our standards, then it's about time you joined. If you're not getting this from other people, you need to be getting it from us. So anyway, join, please. We can't give you everything for nothing. And certainly if you come into conference, it will be worth your while to join rather than pay the higher fees. But anyway, that's something coming up. We're doing a couple of extra different things during the Global Bookkeeping this week. Not done them before, but on Thursday, the 19th of November, we've got a conference for our members from the former Soviet Union countries. And on Friday, we're doing something for all those people around the Commonwealth. So you're all part of the Commonwealth if you want to be part of that. Or actually, you could be part of the Thursday one as well if you know how to speak Russian. Jackie, carry on.
Yeah, a couple of comments come back. One from, Judith's come back and said, yes, I did mean Factual Friday, auto spelling at its best. Yes, I did test predictive text as well. So you'd be surprised at some of the bloopers I've sent out fortunately in texts, and it's only to families, so it's not so bad.
But Judith,
Catherine,
I don't know what fractional means. I didn't know before, but that's good. I like that.
Actually, I was thinking of, when I read it as fractal, and that's a mathematical thing, fractal. I remember doing fractals years ago. Okay, a couple of comments on this top up. Catherine's come back. I agree with Jackie, but if an employer can afford to top up, they don't need government support. Again, this is what I was saying. And Lisa, hi Lisa Phipps has said, possibly if employers could top up the pay, then there is more room for fraud with people claiming the grant who would have been able to employ the people at 100% without the grant. Now, I do need to come back with some research, because I'm sure I've seen somewhere that says that there is a maximum and you can only pay the hours you work and split the rest, and that the employee has to contribute a third of that non-working. I've seen it somewhere, but I couldn't find it. So again, I will come back next week.
So Jackie, just something off the top of my head, how does a bookkeeper prove that this is being done properly? I mean, we're going to have to see a form or something with somebody signing to say they've only done a third of their hours?
I don't know. I mean, there must be an agreement. There has to be a written agreement now, an agreement, and that they are looking for this to be in writing. So there's going to be a bit of frantic looking at written agreements. And once the agreement is, it will be based on the agreement that this is what the system is. And Susanna's come back and said, apologies, I had a call, missed your answer about topping up. My gut reaction at the moment, having looked at all the comments that are coming in and what I've read, is that you shouldn't top up. It is purely the grant. You pay for the working hours and you split the three. Now, the Chancellor was very firm yesterday about the employee contributing a third to this. So I'm sure his idea is that you should not top this up, but we will have to come back and confirm that. Dorothy Mitchell, hi Dorothy, is the lockdown grant only available to businesses with premises? No, I think it's also, yeah, because you have to have rateable value or pay rent or pay a mortgage up to 51,000. So I think if you're in premises where you don't pay rent, you don't get the grant. I'm pretty certain that's right.
Can I just clarify one thing, Jackie? You've been saying that the employee needs to pay 1/3. They don't technically pay.
No, they don't technically. No, they are contributing a third by not being paid. No, they don't have to pay the third. They'd be paying.
Right.
So basically, what happens is,
going
yeah,
pale.
Basically, and of course, what then will go through the payroll? Let's have a look at what goes through the payroll. Is that you're going to have a couple of, when you do your payroll, you might have to look at different types of pay. So remember when we did furlough, we did flexible furlough, we did worked hours, and then we had a separate pay category for furloughed hours. I think this time you're going to have your paid hours, your employer contribution, and your government contribution, and work it out and show it in 3 different sections on the pay slip. And then the missing bit obviously is what the employee is not going to get paid, but because you've got to pay tax and NI and pensions on everything that is paid. So that is going to be based including this. So basically it's the 77% of the normal wage that is going to appear on the wage slip in one way, shape or form, with all the relevant deductions. So you are still going to have to pay, I think you're going to have to pay employers' NICs and pensions on not only your own payment, but also the government's payment as well. She's thinking this through, is something I hadn't thought about earlier.
If I can just throw in here, it wouldn't be a Friday with Gary unless he mentions something about the anti-money laundering regulations. That I've written an article, actually, it's going out in the newsletter. I'm not quite sure when that's coming out. So any time now, I have delayed it a bit. But the trouble is when you're writing an article nowadays, you're part way through it and you pick something up and everything's changed. So you have to start again.
Tell me about it.
But the CCAB guidance, which is the what is it, Collective Committee of Accounting Bodies or something or other. The new guidance is coming out. It hasn't quite been approved by Treasury yet. I think they've got a few other things on their mind, but it's coming out. It's actually quite an improvement on previous guidance because it's a little bit more straightforward and it does explain some of the things that we've been asking questions about for a long time. So, for example, it defines in more detail what a boom is, a beneficial owner, officer, or manager. It does encompass more people, but it's very logical when you read it. And, you know, if you've got somebody working for you that is heavily involved in the running of the business, has their say over clients, etc., it defines whether or not that person is a boom. So that's interesting. It also talks about what is a tax advisor, because I know a lot of you don't think you're tax advisors, and we've been saying for a while, well, I think you probably are. Basically, a tax advisor is anybody who tells somebody how much tax is due. So it's got us away from the tax schemes and the get-rich-quick schemes and all the things that government hates. And it's included now everybody that advises a client on how much tax is due. So that's certainly self-assessment tax, which we always thought so. But I think what it's suggesting now is that if you're providing a set of accounts, and those accounts say how much tax is due because of those accounts, you are now a tax advisor. So you do need to be aware of that. And a lot of people have a tax advisor code, an agent code, and still claim not to be tax advisors. So the question I think they're asking quite logically is, well, why do you want a tax code then? So we've got that sorted. They also go into greater detail, thankfully, about what is an accountancy service provider. It's something that we've had arguments with various people about. It's down as far as entering data onto a database. If you're using figures, you're doing predominantly calculations of any type, even if you're only pressing a button which adds it up on a computer, you are providing accountancy service. And we do get a lot of people who say, well, look, I do a secretarial service, and as part of that, I just do the occasional bit of bookkeeping. Well, that occasional bit of bookkeeping makes you an accountancy service provider. You've got to be regulated. And that's so obviously that the crooks in this world don't think, oh, I won't use a bookkeeper, I won't use an accountant. I'll use a secretarial service, because then they're not going to be covered and they're not going to be as interested in what it is I'm getting up to. So those sort of loopholes are thankfully being cut out. And so I think we're going to be putting up the draft on the basis that Treasury, I presume, is unlikely to change too much with it. But look out for that anyway. Jackie?
That's interesting. Actually, Gary, while you're on that, it's interesting because when we submitted the report to HMRC on the consultation on improving the services of tax advisors, we picked that up immediately, and that there has never been a definition of what a tax advisor is. So at least we're getting some way. And the only other thing I would add to that is that I still think there is a difference between the term tax agent and tax advisor. There is a slight difference between those two, because you can be a tax advisor and not a tax agent, but you can't be a tax agent without being a tax advisor under the new guidelines, I think.
Yeah, and I think that will be defined further, but I think they're trying to just cover everybody in there. And the other thing that I mentioned in there is just to remind everybody that if you are providing tax advice, even if it is doing a self-assessment tax return, that you are governed not only by the anti-money laundering regulations and obviously our professional conduct regulations, but for the last 6 or 7 years, you've also been expected to comply with the PCRT, which is the professional conduct in relation to tax. Now, the thing to point out in that is that does cover, like Jackie says, agents and advisors. It covers everybody. Now, just because the advice is in there, it doesn't mean that you can do it. You are still governed by whatever it is you're qualified to do. So it does talk about what to do when you're holding client money. Now, we at the moment don't allow our members to hold client money. So it doesn't mean just because you've now become part of the PCRT whoopee, I can now start taking client money. Goodness only knows why you'd want to in the first place, but you cannot do that sort of thing. Other than that, I think, and Jackie, I asked Jackie to read through it recently just to check, but you read it through, Jackie. It's virtually us anyway, isn't it? It's just a little odd.
A lot of it is common sense and good professional behaviour and ethics and how bookkeepers should be operating, and that's the only one. And when we had a meeting, we have a focus group for people with clients who do hold client funds. So things like solicitors, estate agents, conveyancers, independent financial advisors, insurance brokers, all those sort of things. If you have a client who is in that, who is holding client funds, you need to be aware of the regulations about holding client money and how it has to be kept. And you need to keep an eye that it's being kept properly, because even though you yourself are not holding the money, you need to be aware of the regulations. So as far as that's concerned, that section of the PCRT does give you the knowledge that you need to have to be able to do that part of the job if you have a client in that field. So yeah, very important.
And something else that cropped up this week later, we've done an inspection on a practice, and the practice looks after payroll for people, and they've been making sure that they've got the passports and they've got the identity and the proof that they could be an employee. They've gone through all of that. They forgot to do it for their 2 members of staff. She said, oh, well, I know them. Yeah, well, I'm afraid you've still got to have those details on your file. So unfortunately, this lady and her practice is not compliant, but it's just something to remember. And it's something that seems to happen with our members. They know really well how to get their clients to run their business and their books properly, and they keep neglecting their own books and running their own business properly. So,
can I just ask the members, whoever's doing the background to this, is it possible, you don't need to come on as anything, to copy the chat questions at the end, because I'm trying to copy them, so I've got a record and I can't actually copy and paste them. So can I just make sure that we get a copy of all the questions and answers and the chat after this, so I can pick up on all of these queries, please?
Okay.
Thank
I'm
you.
sure somebody there is listening to that.
Right. I think I've covered everything that's on the questions. Okay.
How are we doing?
All the questions and all the chat
Professional.
comments.
Now, somebody, hold on a second. Sally has just come up with something. I'm not quite sure where she's come up with it, but she's come up with something. The professional conduct regulations that I downloaded in 218 say that in section 16, the members must not give tax advice. I took from that I shouldn't tick the tax advisor queue on the self-assessment. So has that now changed? Yeah, Sally, I think that's what I'm just saying, really. Tax advice to us in the past has been very much, I think this is where you should put your money. This is how you should save tax. This is a new scheme that I've found in an offshore or something or other. But it has been open. So, yeah, if you are doing self-assessment tax forms, or you're helping somebody do their annual accounts, and then you're working out the corporation tax for them at the end of the year, then, yeah, you need to start ticking that box.
Yeah.
And, you know, I know obviously if you're doing self-assessment tax forms, you'd be qualified to do that in our terms. If you're doing payroll, you need to be qualified for that. And if you're doing FRS 105, 102, again, you need to be qualified. Those things are not covered in the core bookkeeping, because when we started all this, way back when I was a lad, 24 years ago, stop laughing, Jackie. 24 years ago.
Seems like yesterday, Gary.
He didn't touch a lot of the stuff which now has been opened up by subsequent government changes, etc. So 105 is, what, a couple of years old. That opened one set of gates to us. 102 virtually opened every gate possible to us, up to 10 million turnover or something like that. So yeah, they have changed a little, but you'll see when we put the guidance out that there is a actual terminology, and that definition is what we're going to be using, because the CCAB guidance is what all supervisors in the accountancy service sector sign up to, because they've got committee after committee after committee, and they sit there plowing through this with solicitors, legal advisors and everything. So there's no way we're going to try and change it.
Yeah, can I come back on that, Gary? Because there's 2 comments come up in the question and answer, one from Susanna and one from Philippa. Philippa's first, does it include calculating and submitting VAT returns? Now, I don't think a tax advisor as such would just do the calculation and submission. Where it comes in, and this picks up on Susanna's point, does it mean that when submitting a self-assessment for a client, we now have to answer the question as to whether they have a tax advisor as yes, as we are now by definition tax advisors. One of the things that I put in my submission to HMRC was that if you're doing a self-assessment tax return, you can give, you might be expected to give tax advice, like if they've got quite a bit of money and they're wondering what to do with it, you might say to them something like, well, why don't you consider buying a fixed asset and then you can claim back the capital allowances and hence reduce your tax bill. That is a perfectly legitimate tax advice. And tax advice in that respect might also be that you're looking at it and saying, well, actually, you can't claim that as a tax deductible deduction. So, you know, that's entertaining. You can't claim that. You might be able to claim the VAT back, but you can't claim it as a tax deductible expense. So I think as soon as you get into the self-assessment corporation tax area, you are by default now a tax advisor, but there are limits to how far that tax advice should go. Because one of the other ones that we've just submitted a response to is tax avoidance schemes. What Gary and I have agreed that our members should never get involved in is dealing with these tax avoidance schemes and watching out. And I will actually do something on this at some stage, because it's looking at the various schemes that there are on tax avoidance. And there is actually a list of the ones that have been rejected by HMRC on their website. It's something we've never got into, because tax advice is something that we've never allowed members to do. But as Gary said, that is changing, and we are going to have to get some more advice out to you.
And completing and submitting of returns.
Right, it's the calculation, completing and submitting of returns. We think that includes VAT, because you can advise them on VAT schemes.
On the VAT, yeah, I think that's right.
I'm just trying to get the legislation up at the moment, but it's not working on my phone. We haven't got the best of internet round here, and when we've got you and me on here, then it seems to drain everything else.
Yeah. And there's a couple more coming back. So Philippa, then yes, I think if you're doing anything to do with any tax, I think all tax agents are tax advisors, but not all tax advisors are tax agents, if you see what I mean. Because for me, a tax agent is someone who has an agency with HMRC to submit any form of tax return.
It's up now, because Sally, I take your point, but we haven't changed it because this is literally hot off the press, which is why my article's been delayed at the moment, because I'm still trying to get the okay for it to be carried. But I'm just trying to get somebody here now having a very quick look for me to see where this is. But I think they're trying to get everybody included as tax agents, to be honest. But carry on, and I'll, as soon as I get it.
Yeah, Shana's just asked, what if somebody asks you if they should have an electric car on the business for personal and business use?
That's the problem.
Well, if you're buying, I mean, I think this is now that most of us who are doing these self-assessment tax returns are going to be tax advisors, whatever advice you give them or questions you answer, because the minute you answer a question about tax, you are giving your opinion as a professional, and hence I think probably now have to be tax advisors.
Anything.
Right, now let's just have a look at this. Regulation 11D of the 2017 regulations defines tax advisor to include both direct and indirect provision of material aid, assistance or advice on someone's tax affairs. This includes any specific tax advice given to clients, including completing and submitting tax returns, advice on whether something is liable to tax, or advice on the amount of tax due. Where a business is providing tax services through virtual or automate, no, that's probably going a bit too far now.
I think that includes VAT, Gary, because the VAT return is a tax return. It will include VAT from that, And the fact that you're calculating it, even if you're not advising, you're calculating, that makes you a tax advisor.
Yeah, I think. Yeah,
and Shana's come back. Shana's come back and said, should members be level 4 SAT qualified to be a tax agent? No, because the level 3 self-assessment is still a valid qualification. I know we've withdrawn it now and replaced it, but those who have the level 3 SAT qualification, you're slightly limited in what you can do, because there are certain things that you still can't do. Things like foreign income, capital gains tax. If you have a level 3 SAT qualification, you can still be a tax advisor, but only covering the topics. If you want to do the more advanced topics of capital gains tax, you have to take the level 4 SAT qualification. There are no exemptions or extensions to that original qualification. And
anybody that's got the level 3, I think they ought to think about taking the level 4. And at some stage, I think we're going to have to make that a compulsory shift up as well. It's not at the moment, but if you look here at section 330 of the Proceeds of Crime Act, it defines relevant professional advisor is defined as an accountant, auditor, or tax advisor who is a member of a relevant professional body, and we're a Schedule 1 relevant professional body. Then the body makes provisions for testing professional competence as a condition of admission, and imposing and maintaining professional and ethical standards for members, along with sanctions for failure to comply. Now, what they're trying to do is keep out the non-qualified people. So this is the thin end of a long-awaited wedge, as far as I'm concerned, because it will stop everybody. Very soon, your practice license, we're hoping to get extra stuff put on there, but people are going to want to know, are you able to do my tax? Otherwise, you know, well, I think it's going to be a great move forward for us. And because we're this Schedule 1 body, we're in the legislation already, we are a respected body because of that. Therefore, all of our members are respected because of the badge that they have, the ICB badge. And that's why I'm saying, really, I think if you've got our current SAT, which is at level 3, it's been moved to level 4 because it's jumped up a peg. It includes other things. And you need to do the level 4, I believe. It will become compulsory in due course, I think, because you can't, but it's like somebody said to me the other day, it's a bit like being a little bit pregnant. You keep straying into, you can't do it, you know, you're going to keep straying into areas which at the moment you're not qualified to do.
Make sure you get these 3. Do it without anything.
Yeah, and it's just been pointed out, actually, there are some of our members who are being pulled up at the moment because they're doing self-assessment tax returns without even level 3. Now, there are random checks taking place by HMRC. We're getting people from HMRC ringing them every 5 minutes, checking people's credentials. If they find that quite a few of our members are not doing it, the next thing they'll be doing is asking for everybody. So, you know, this information is being shared, and they're just really trying hard to keep the bogus people out and the unqualified people, and all these people who said, oh yeah, I you know, my dad taught me how to do it, I've done his for years, so I decided to set myself up as a tax advisor. Yeah, whoopee for you, but you've got to be professional, you've got to get it right.
There is a comment up there from Dee Youngman. Hi Dee, we haven't spoken for a long time, how are you? She says, I can change to a tax advisor from now on, but have already submitted a few 1920 self-assessment returns with only the tax agent box ticked. Is this a problem?
No, I don't think so. Not at the moment.
I think at the moment, just from now on, I think I wouldn't go back and change things, because the minute you start to go back and make adjustments to things, I think that's opening up a whole other can of worms. So I would just say from now on, yeah.
The other thing is, if you, and this is something which it's not quite relevant to this particular topic, but if you are providing a tax or a company registration service or company secretarial service, and you start to do that now, don't think, well, I didn't mention it before, so I'll wait for another year. No, you need to tell us immediately and within 14 days. So if you're helping a company set up a limited company by helping them fill in the forms, advising them which forms to fill in, getting it down, that's part of it. If you are using your home address or office address as a registered address, you need to tell us. And particularly if you are acting as a secretary or a nominee director or anything in order to get that company off the ground. Now, we've got some of our members who've got tens of thousands of these companies registered against their business, because people get to know them and say, oh yeah, that's all right, this person can set up companies for me. It sounds great. But the onus is then upon you to make sure that those companies are bona fide companies. And I know that the one organisation that has now left the building, as they say. They were all but weird companies, bogus companies, and by our members getting involved with them, that enabled them to set up bank accounts. So people were putting in money and paying it out again. It was bogus, and I can't release any details about it at the moment because it's all sub judice, but it'll be coming out in due course. And it's eye-wateringly weird what they were getting up to, and obviously criminal.
There's a follow-up question to that then, Gary, from Suzanne Proctor. Suzanne says, so if we use subcontractors for things that the member is not qualified for, is this acceptable for the practice? Presumably, it's to do with registrations and the qualifications of the staff.
Again, looking at the rules, we need to know who these people are. We need to check what their qualifications are, and then yes, you can use them. We have a lot of members who use chartered accountants who are on their staff, and they are not obviously qualified to become chartered accountants themselves. So yes, this is possible. However, you do need to make sure that they are qualified to do the work that you give them. And that's very, very important because, again, under the legislation, you are responsible for your practice and you're responsible for making sure that the people are competent, and you have to test their competence, their ethics, and their integrity. And it's all sort of a grey area at the moment, but it's getting further and further into becoming black and white. And you just need to get it in there. It's part of the regulations. The regulations are there. You need to be careful. We have quite a few of our members who in the past have just found somebody locally who they said, well, it's all right, they're not doing anything special. I'll sit them in the corner and they can do the data processing, etc. You really don't want to be doing that anymore, because if that data goes wrong, and again, there's another little article I've written, which is coming out shortly, which I took from an HMRC press release, or actually from a National Crime Agency press release. It was really difficult when I first read it. I've tried to rejig it a little bit. It's just been proofread, and I've been told I've still not made a good job of it. But it talks about a corporate responsibility that now you are responsible for anything that emanates from your firm, and people within that can be fined as individuals, found guilty of doing something as individuals, as well as you as a body. But if you've employed somebody that just isn't up to scratch, then I'm afraid it's all going to come back down on you. So we are working on a way of assisting you with this. We will shortly have a questionnaire and a sort of a mini test, a mini exam, which even if you employ somebody who's a chartered accountant, you'll be able to say, great, thank you very much, but I need you to sit this test first. And once they've passed that test, then you can put that on file and you can say to ICB, great, this person has passed your test, here it is, and therefore they are competent at what they're doing. And the other thing to remember, that's happened recently. Somebody employed a chartered accountant, retired chartered accountant. This is great, I can do accounts. I can do year-end accounts because I haven't done my 105, 102. That was fine. But then they sent him out to do some bookkeeping work. Now, unfortunately, accountants, and this is not particularly against accountants, they tend to learn from the balance sheet up. They know nothing about what goes on underneath. So this guy was writing off all sorts of stuff because he said, well, I've always done that. I write off to the nearest £1,000. Well, bookkeepers don't. And it messed up a whole set of accounts, and the company has had a tax investigation, and now the member in practice is under investigation as well. So just be careful out there. Always talk to ICB. You can come on here and ask questions. That's fantastic. But if you've got a doubt about something like this, then please talk to us. You're not working by yourself, but ask the questions. And if you're going to give us a scenario, will you please make sure you give us everything? Because otherwise we answer the wrong question. But anyway, it's actually 3:30, Jackie. We've done an hour.
Yeah, I know. We've been busy. I've just noticed, we've still got over 100 people on the Zoom meeting, which is amazing. So there's obviously a lot going on at the moment.
Yeah. And Facebook is heaving as well by the look of it. So yeah, we're back up to the pre-COVID days.
Amazing. I will go away, and Iris is going to send me all your questions, which I will work through, and I'll have hopefully as many answers as I can, or comments for next Friday. Just as a slightly different to top up again on something I mentioned last week. Remember the dreaded Making Tax Digital for self-assessment that we looked at years ago? That, as I said last week or week before, has now coming into force in April 2023. Now, I had a meeting with the HMRC technical team on that this week, and they are starting to do a pilot scheme, broaden out the pilot scheme from this April, starting for tax years starting in April 20, to work through the new ITSA scheme for a year, so that by the time we get to the end of tax year, where are we, 21, 22, and heading towards 23, they will have some more details. So they're looking for people who might be willing to take part in that. It's a quarterly upload of basic information. We're looking at all sorts of things about how to combine that with VAT returns and things. We're still not sure what's happening about adjustments on that. There's a lot of work being done on that at the moment, and there will be a final way of uploading all your adjustments. So I'll have a lot more information on that coming out over the next few weeks, and we will be asking for anyone who's going to be brave enough to possibly volunteer to take part in the extended pilot scheme for that. The software companies are coming on board. A VAT extension for MTD for voluntarily registered companies with turnover less than VAT threshold comes in April 2022. So if you've got clients in that area, you're going to start looking at digital storage. So just a reminder to start thinking about that for the future, because the time is going to disappear very quickly.
Yeah, and just following on from the Friday when we didn't have Jackie with us, and I sat and went through the money laundering regulations and what we were actually looking for when we came for an inspection. I mentioned the bit that we need to be told within 14 days if you've changed your company entity from perhaps self-employed to employed to a limited company, etc. I'm presuming it had something to do with it, but within 48 hours, we had 21 people saying, I think you knew this, but I'm really just checking. No, we didn't. But anyway.
Your system, not ours. Your system, not mine.
Yeah. So the thing to remember is that, you know, if you're sitting on something and thinking, well, they might not find out, that's not the way to do it. Honestly, you need to tell us. We're not going to be very pleased, but at least if it's an unprompted disclosure, that is completely different. Yeah, you know, people move on and do different things. And we rang somebody recently, and she'd actually already sold the company. And I said, well, we're still providing the practice license for a company then that doesn't have an ICB member in it, so that's not allowed. So yeah, all things like that, please just keep us informed. Yeah, we've got people going through all the records on a daily basis. It's actually to help you, because if we find that you've forgotten to do something, we will give you a nudge. Depending on how bad it is, but you know, we'll give you a nudge, because you don't want to get caught out with this any more than we do, and we want our members to be the absolute best on the block. I've been boasting about you all for so long. There's a lot of people out there would love me to see me knocked down in flames when it turns out that you're not, and I'm not having it. You're the best, so that's the great thing. That's all about it. Anyway, Jackie, I think I
think we've answered everything. Thank you all for your questions. You've been really busy and awake. I don't look as though anybody dozed off during this session this afternoon, which is good. No.
And we will be back next Friday, but if something crops up earlier, we might do a one-off. So look out for the emails. If we can cover it in an email, we will. But if Jackie needs to come on and talk it through with you, or she thinks she's got enough to do that, then we'll spring a surprise one on you at some stage. So that's it. And still questions coming in, but I think
I think Margaret. Oh, hi, Margaret Crawford. How lovely to have you on. Thank you both so much. And a couple of others. Lisa says thank you, very helpful. So does Susanna. What would we do without you? Probably have a much quieter Friday afternoon, but you know, you probably have to do a lot more reading. So anyway, lovely to be in touch with you all, and I will see you next week.
Bye, everybody.
Bye. Have a good weekend.